Hi traders, and welcome to the Technical Analysis Market Watch on Friday the 23rd of December. So I've seen some really good technical analysis setups play out this week. The levels that we talked about last week certainly held up and gave us some good targets to aim for. So we'll jump straight into the analysis and see if we can identify any trades for today or early into next week. So I'll start out here with the Aussie USD. You can see we've had a lot of action this week. Look, all of the bodies are very close to the level of around the 66 cent mark. So 66.80 is the level where most of the bodies actually opened and closed. You can see very small bodies, but big wicks. So we've certainly seen the volatility this week, and it has hovered in the range that we were discussing. So realistically, from a scalping standpoint, it looks quite ugly. But if you go to the smaller time frames, you'll really be able to isolate some of these trades. We'll auto check that up, and you can see that the higher high, higher low sequences were playing out to the levels, and they were sustained moves. So you were certainly able to get in on some of these trades, but obviously you needed to be at that level when they were actually, especially on a 15-minute chart. You can see we had a series of higher highs and higher lows, and same deal on the way down. So you were able to get involved, but it was stuck within a range. So even though it looks a little bit wicky on a daily chart, there were actually scalping opportunities in between. Now, it's no secret that this level is obviously a very strong level. We can see that we've got very strong support right through here, and we knew that we had divergence at the top end with the 200 moving average bearing down on it and MACD divergence as well. So, you know, the role reversal zone certainly held up and did its thing, but yeah, this week has proven to be a very strange sort of week in the sense that it's done a lot of movement, but actually ended up in effectively the same place. Until it does break this zone, though, it's not really going to give us an indication of the next trend. So the only way we can really play this is actually wait for a break of this level at around the 66.30 mark, because realistically, until we get a daily close below there, all we're doing is actually playing the volatility game and hovering inside that range. So if we get a daily close below 66.30, we can start targeting that lower range at around that 65.30, which is 100 pips from there, of course. Pretty good trading in that point because there isn't a lot in between. You can see that although there is a little bit of movement, nothing really is going to stop it from getting there short of the 50 moving average. But I think a bit of momentum, and especially after a week of consolidation, that's not really going to hold very strong. I think that we'll find ourselves down here pretty quickly if we get a daily close at around or just below that 66.30 level. So certainly one to watch. On the way up, though, we wouldn't be looking for long opportunities until we actually get a daily close above the 20 moving average. So until we're actually closed above the 67.5 cent mark, we're not really going to be doing anything from a long perspective. And if it does get up there, which it certainly can, the next move up is going to be the 68.50 mark here. So we can see the previous highs are going to be our next target. Look, you know, these lines aren't drawn in hindsight. You know that we, for all of you who have been watching for the last year, you know we put these lines up forward, and they have been playing out really, really well in all of the currencies and the indices that we've been looking at. So they're there for a reason, and that's because of the role reversal and support and resistance. So it gives us a very easy target to aim for. Hopefully you're able to catch some of those moves on the Aussie in the smaller time frame this week. But yeah, realistically, the bigger swing moves have been very easy to trade. So again, the daily close above 67.50, and our next target's going to be the 68.50. So pretty easy target to aim for there. But a daily close below the 66.30 mark, and then we start to look down at the 65.30, which is next serious level of support. Okay, so pretty straightforward trading on the Aussie. All right, we'll move over to the US dollar CAD now. This one's been an interesting one as well. Look, it looks like it's starting to get a little bit tired from the standpoint of making new highs. It was trading up. You can see we've got a series of higher highs and higher lows. So we've got all of the lightning bolts that we actually are always looking for. But the last one only just made a new high. And as you can see, we've seen a little bit of weakness this week. Came down and touched the 20 moving average, which is pretty standard. They've bounced off that. So from a scalping standpoint, it's been pretty good. You've been able to get a reasonable move down and also a little bit of a bounce up off that 20 moving average. And this is why it's really important to do multiple time frame analysis, because when you look at it on a daily chart, you can see very clearly that we've got a 20 moving average there. Now, if you were to actually highlight that level, okay, and look at that and say, all right, this is our level, and then we take it back to a 1 hour chart, for instance. Once it hit that, you can see the very clear bounce off it. And if you go down to an even smaller time frame and actually want to scalp it off there, you can see that the 15-minute actually was reacting. It bounced off there, made the high, and then off it went. Okay, so realistically, you wouldn't have known this level was here unless you were actually looking at the daily first. So you wouldn't have known that this was a 20 moving average daily on the daily time frame if you didn't actually look at the daily chart. So that's why it's really handy to actually mark up those levels on the bigger time frames, because they're significant levels, and once you have them, you can go to the smaller time frames and actually check them out. So really, really important, but pretty good trading on the CAD as well. Hopefully you're able to catch a bit of that move, because yeah, you could see the weakness was there. As you can see, we started to roll over a little bit here. And, you know, MACD, although we didn't have a lot of divergence, you can see it's starting to weaken. And you know, is that going to be a double top? Well, you know, only time will tell. But realistically, it's got a bit of work to do. The way we play this now, it needs to close above 137 in order to start looking for the long opportunities again. This level here is fairly strong. If we get a close above there, we can start to target the previous highs at around that 138.50. That's probably the next real target to go for. If we get a close below the 20 moving average and of course this support zone, that's when we're going to start targeting the next move down, which is around this level here at around that 134.50. So both ways are reasonable. I'm not really fussed either way on this one because I think it's starting to level out a little bit, even though it is in an uptrend at the moment. It needs to do a little bit of work to make a downtrend play out. But if it does, happy to get involved because there are reasonable levels on the way down as well. The ultimate level being the 132.20 area, which is this roll reversal zone there. Very important touches there. Resistance at this point here, support here. So very, very important zones. But for me, if we get a close above 137, even if it's a 137.50, which is probably my ideal to clear all this area here, then it's a pretty easy 150 pip trade up. But if we get a close, a daily close that is below the 20 moving average and this level here, we can start to target in the first instance of 135.20. But if that level doesn't hold, the next serious level is 132.50, which is a pretty reasonable move down. Okay, so good trading on the CAD. All right, US dollar yen. This one here hit the zone that we were looking at. We did say the 131 was going to be the target. A very, very important roll reversal zone. You can see very strong resistance over here and support there. Big reaction off it. So it was always going to prove a level of resistance or support on the other hand if you were actually coming down. If it did, because you can see the resistance was very strong here. Again, this is a daily chart, so it's a no-nonsense chart. Yeah, the 20 moving average held it, and when the 20 moving average is holding down and bearing down on price, quite often you do see a reaction like this. It would have been a little bit of a difficult one to actually get involved in if you weren't looking at the smaller time frames. On a daily standpoint, it was hard, but you get all of the signs that you're looking for. The 20 moving average is, you know, holding it at bay and has done for a long time. You can see that, but the logical target was going to be the 131, and as you can see, it hit it and reacted off it. Look what it does from here. If it reacts at this level and finds a bit of a bottoming pattern, if you go to a smaller time frame, say a 4 hour, and you get a bit of a rounding bottom or even a series of higher highs and higher lows, we can look to scalp it back up to that 135 level, which is a reasonable move. It doesn't look like a lot, but it certainly is. But realistically, price action has to dictate that for us. Okay, so if we see price action start to push up and we can see a bit of momentum kicking in, the way you want to be aiming is the 135.20, which is the next roll reversal zone, and that's going to be the next real level of resistance. But good move. Hopefully you were able to catch that. If you saw the signs early on the 20 moving average and you were able to get involved in that roll changeover when it did actually change momentum and start to lightning bolt on the way down, it would have been a good reward, and I think the take profit was very standard. And although it seemed very, very unlikely way back over here when we were looking at the 150 mark, that was always going to be the level it was going to get to. If it did start to trend down, this was the level it was going to aim for, because this was one of the most significant roll reversal zones there. Okay, so hopefully you're able to catch maybe some of that bigger move if you were actually trading it down, but also scalping it from this level here. All right, we'll have a quick look at the dollar index and then we'll move on to the euro, of course. This has found a little bit of a bottom at the same level. You can see here we've got a bit of support at the previous roll reversal zone, support there on the 20 moving average and resistance there. We talk about this all day, every day. We've talked about it for the last 3 years in the Friday market watches, and we do that because they continually play out, and these levels are very easy to aim for. And when the game is being played from a technical standpoint, I think it makes a very, very easy trading environment when you actually are aiming for take profits. You can see we've had a nice rounding bottom here. Again, the euro is really the story. It's found support here. Let's move over to the euro, and you can see that, yeah, that target was hit. The 107 was hit fairly early. Well, it was hit early in this trend, but it has actually done nothing since. Very similar to the Aussie in that respect. You can see that we've got a lot of wicks, and it's really done nothing. The bodies are very close together. No real surprise there, because obviously the dollar index is trying to turn around. If it does start to move in a particular direction, the 107.20 is going to be your first target. So if we start to see a bit of strength in the smaller time frames and we see a series of higher highs and higher lows, the logical target is going to be the 1720, but this is a very serious level for it to break. unless it breaks this properly with a daily candle, we're not going to be looking any higher on this one. 109.50 is the next target, but realistically, the first target's going to be the 107.20. If we see, I wouldn't be inclined to short this until we actually get a close below the 20 moving average and this level here, which is a 1.5. Now, I know that's a fair bit away, but realistically, there's a lot of support in front of it that is going to give it grief to actually get down there. So I wouldn't want to be actually taking that on. I would rather let it get all that out of the way. If we get a daily close below the 105, then we can start to target the previous lows at around that 103 level. But until that happens, then that's still quite a while away. This one here is the next, I remove that line, but it shouldn't be, it should be there. This level here is the 104. You can see support, resistance, and resistance again. So if we do get a daily close below the 20 moving average, this is the target that we'll be going for. So really, really good trading on the euro. I think it's been very technical for us this year, and very easy to trade. All right, the last one we'll have a look at is the S&P 500. Now, look, this attempted, it did everything it could to get below the 3,800 level, which is the level of no return. We don't want that level broken if we're looking for any sort of movement up over before the New Year's period and allow the Christmas rush to continue. We had a bit of a pause last night, obviously a big drop down, but it did react quite significantly off that level, pulled back up and nearly gave, basically half of its fall has been returned, which is a very positive sign, especially when you know that that level is so strong. Look, where it goes to from here is really going to be momentum driven. If we start to see a series of higher highs and higher lows, the very first target you're going to go for, of course, is the previous high here at around that 3,900, but it needs to break that to get excited. If we don't get a close above the 20 and the 50 moving averages, which are both here, it's got a bit of work to do in order for that to happen. Then we're not really going to get excited about a move up. I think that, potentially, we're a little bit too close to Christmas to be calling it a Christmas rush now. We'll call it a Christmas pause. But, it doesn't mean that we're not going to get a reasonable move up to leading into New Year to get back up here, but it's got a lot of work to do. For my mind, I think it's probably going to hover in this range. I think this is the trading range for now, between the 3,800 and 3,900, probably scalping opportunities. But just be very, very mindful that we're going into a very low volume time of the year. The next 2 weeks are going to be very, very quiet in terms of volume, so it's going to be mainly retail trading, not big institutional trading, and that's going to mean a lot of whipsawing action. Okay, so just be very, very mindful of that when you are trading these smaller moves, because you are going to be whipsawed a little bit. But just play the ranges, and I think that's generally the best. Sometimes they can be a little bit exaggerated, the moves, but realistically, you want to try and play the ranges and keep them as tight as possible until we see some momentum. But until we get a daily close above the 20 moving average, which is above the 3,920 here, which that'll be there by the time it actually gets up there, we're not really going to be interested in going long. So we really need to break above that level to start looking at that 4,100 as the next logical target. But again, a close below 3,800, if we do actually continue down and we get a daily close below the 3,800, I think that the weakness could set in even in a low volume environment, and we could possibly see it back down at the 3,700s or 3,650s pretty quickly. And in a low volume environment, sometimes you might be surprised at how much it can move once it gets a little bit of momentum in its favor. So be very mindful of that. If we get a close below the 3,800, you can start to probably target these levels with some sort of confidence when the momentum actually kicks in, even though the volume is low. So that brings us to a close for 2022. This is the last Friday wrap we're going to do for the year. We'll be back in 2 weeks' time with obviously the start of January, and we'll see some trends hopefully start to get established by then. We've got 2 weeks of trading in between. I hope you've had an awesome year's trading and an awesome week's trading, of course. I thank you so much for your attendance. We thank Pepperstone for actually bringing these to us. It's been a pleasure bringing them to you. Hopefully it's been a profitable year for you. Have a great Christmas and New Year, and I look forward to seeing you early in the new year. Thanks very much, everyone.